Hello, dear listeners. Today we are going to talk about one of the most mysterious, most successful, and perhaps most unconventional figures in the financial world. A man often called the king of the quants, but who always defined himself first as a scientist, Jim Simons. In the world of finance, most investors see the market as a beast that needs to be predicted. Charts are analyzed, news channels are monitored, and geopolitical theories fly left and right. Everyone is trying to guess what the next big move will be, but for Jim Simons, the market was not a mystery to be predicted. It was a massive encryption system that could be solved with enough data, enough discipline, and the right mathematics. Today we will examine in detail how he demolished the classical trader mindset and how mathematics begins exactly where human intuition ends. Jim Simons' story doesn't begin in the flashy corridors of Wall Street, but in the quiet rooms of mathematics departments. He wasn't a market hawk chasing billion-dollar trades in his youth. On the contrary, he spent the first half of his career dedicated to equations, abstract geometric structures, and mathematical proofs that push the boundaries of the human mind. His work in the field of differential geometry, particularly the Chern-Simons invariants, holds a fundamental place today, not only in advanced mathematics, but even in quantum physics. So, what made a mathematics professor one of the wealthiest men in the world? Here lies our real secret. Simons entered the market not just to make money, but to validate a model. For him, financial markets were no different from the most complex differential equations waiting to be solved. To understand his mindset, we need to look at the mathematical concept of an invariant, something that remains unchanged. Invariants are fundamental properties that stay the same no matter how much a structure is rotated or stretched, unaffected by superficial changes. Simons translated this way of thinking directly into finance. Prices may change every day, news flows may disrupt the market at any moment, or crises may shake regimes. But according to Simons, beneath all this noise, there were hidden structures that remained statistically stable and never changed. The human eye could not see these structures because we are organisms programmed to focus on stories. But mathematics and computers with high processing power could pick them out. When Simons looked at the market, he never asked, "What will happen tomorrow?" He had only one question: what is repeating and why? This brings us to Simons' most radical and perhaps most controversial stance, an absolute distrust of human intuition. For a classical trader, intuition gained through experience is sacred. Expressions like, "I feel the market," or "I sense a reversal here," are carried almost like professional medals of honor. Simons, however, pushed this approach aside. To him, intuition is merely a bias or an illusion unless it is statistically verified. If an idea truly provides an edge or an advantage, it must be measurable and testable in historical data. If we cannot prove it in past data, that idea is nothing more than a nice story. Within Renaissance Technologies, the firm Simons founded, a good story never held any value. Only one thing was valued there: statistical consistency. Sometimes, even if they couldn't mathematically explain why a strategy worked, if the data proved the strategy did work, it was included in the system, because numbers do not lie, but people do. So, who built these massive models? When Simons founded Renaissance Technologies, he broke another major taboo of the financial world. He almost never hired traditional financiers. He didn't hire the star traders of Wall Street. Instead, he hired mathematicians, physicists, astrophysicists, and computer scientists. This was a conscious choice. According to Simons, professionals with a finance background thought with the patterns and biases brought from the past. He, however, wanted the data to speak for itself. This is why at Renaissance, algorithms, not humans, are at the center of the decision-making mechanism. The role of humans is not to decide what the system will do, but to constantly improve the system, collect data, and refine the models. No one there can open a trade by saying, "I think gold will rise." The heart of the system is completely purged of human ego. This system's fundamental approach is its perspective on data. For Simons, data is not just a chart or a price table, it is the raw material of the strategy. Over decades, Renaissance Technologies collected, cleaned, and classified every imaginable type of data, not just price and volume, but everything from the movement of clouds to calendar effects, from changes in correlations to the smallest shifts in market microstructure. All of this forms the system's food chain, but Simons' greatest genius lay in his decision to combine thousands of weak signals rather than looking for one single strong signal. In the financial world, Most people search for the Holy Grail, that one big indicator that explains everything. Simons knew that individual signals would decay over time. Instead, he built an empire on weak signals that meant very little on their own, but provided a massive statistical advantage when combined. This is a vision that perfectly aligns with modern artificial intelligence and machine learning logic. The concept of an anomaly is also very special to Simons. But these anomalies are not permanent opportunities, as most investors think. According to Simons, an anomaly begins to decay and disappear the moment it is discovered. As market participants notice that opportunity, the return on the opportunity decreases. Therefore, the task of the system is not to benefit from an anomaly forever, but to detect anomalies before competitors and extract maximum efficiency from them before the effect disappears. This is why Renaissance's models are never static. They are constantly evolving, constantly changing. Even if a strategy has made incredible money for 10 years, the moment its performance drops, it is discarded without any emotional attachment. This discipline is one of the hardest rules to implement, requiring the complete exclusion of the human ego from the system. The most concrete proof of the validity of Simons' approach is, undoubtedly, the performance of the Medallion Fund. Medallion is considered the most successful fund in investment history, and its returns are so high they sometimes seem too good to be true. But Medallion's real success is not just the high numbers it earns, but providing this gain with incredible low risk, that is, with stability. Simons even knew how to limit this success at a certain point. He realized that the fund's capacity was limited, and too much capital would spoil the efficiency of the strategy, the famous edge, so he eventually excluded outside investors from the fund. This is the integrity of a scientist who prefers long-term system health over short-term commission earnings. So, why didn't Simons teach his methods to anyone? Why did he remain so secretive? The answer is actually simple, because to explain it is to break it. A strategy known by everyone in the market is no longer a strategy, because everyone starts doing the same thing at the same time, and the profit margin drops to zero. Renaissance technologies always moved quietly and deeply against the outside world. But there is an interesting detail. This secrecy was only toward the outside. Inside the company, all teams had full access to data and models. By providing complete transparency internally, Simons maximized collective intelligence. Information was shared rapidly inside and kept behind a steel shield from the outside. What should today's modern trader learn from Jim Simons? Perhaps the most important lesson is not to try and copy his methods exactly, because Simons' success comes not from a specific formula, but from a whole mindset: discipline, measurability, ego control, and constant adaptation. The real question for today's investor is this: is what is making me open this position a story, or is it tested data? If your answer is a story, you are still guessing. If it is data, you have taken your first step into Simons' world. Simons showed us that the way to beat the market is not through feeling the market, but through seeing it as a statistical problem. As we approach the conclusion, let's ask that vital question again: can the market truly be solved? Jim Simons' career and the incredible wealth he attained give a very clear yes to this question, but on one condition: not with human intuition, but with disciplined data analysis, pure mathematics, and systems completely purged of emotion. This path is difficult because it goes against human nature. Most of us want to be right, to be able to say, "I told you so." Simons was not interested in being right. He was only interested in the system working. Jim Simons was not a trader trying to predict the market. He was a scientist trying to solve the market. His legacy is much more than the billions of dollars in his bank account. He will be remembered for this great intellectual revolution he left to the financial world. The next time you look at a chart, ask yourself, do I see a story here or an invariant that can be measured? Thank you for listening. In the next episode, we will continue to open the invisible doors of the markets.